it's never been easier to create a product and thus like start a company. The differentiators that we really look for, one of them is like subject matter expertise, domain expertise, because that's what they can bring to the table. Do they have a really strong network? Because distribution is key today, because again, like anybody can build a V1 prototype, but can they actually take it to market? Do they have the network that can help them get those first, dozen to a couple hundred customers, depending on like the market size that they're going after? And then a few other, factors that we look for around like grit, ability to fundraise, storytelling, and then some other things. But yes, we are refining that. We are actively refining that right now.
Welcome back to Funded, a show taking you behind the scenes of the startup fundraising journey. On this episode, I sat down with Aileen Allen, the newest partner at Mercury Fund, Texas's first venture capital fund. Aileen focuses on vertical AI, blockchain, and developer tooling at the seed and Series A stages. What makes her perspective unique is the 15+ years she spent as an operator specialized in go-to-market before making the jump to VC, including 7 years running solutions and enterprise marketing at Atlassian. In this episode, we cover all things early stage go-to-market and so much more. Aileen shares why domain expertise and distribution have become the real differentiators, now that anyone can build a V1 in a weekend, how Mercury Fund thinks about founder profiling in the age of AI, and what she's watching in the fields of agentic commerce and developer tooling. So let's get into it. I really enjoyed this conversation with Aileen Allen, and I think you will too. Aileen Allen, thank you so much for joining us on Funded.
Excited to be here. Thanks for having me.
I'm really excited to get into all things startups and early stage go-to-market with you. First, I'd love for you to just give a quick overview of Mercury Fund.
So we're an early stage venture capital fund headquartered here in Texas. We invest seed Series A, which I think titles and monikers on funding rounds are what they are. Who knows what they are sometimes. We get really excited about vertical AI, blockchain, and a little bit in frontier tech. I specifically spend most of my time looking at agentic commerce and anything that empowers developers. So think like developer tooling and workflows. We've been around for 20 years. We are the oldest and longest standing venture capital firm in Texas. $160 million Fund 5 will go out for Fund 6 later this year.
Amazing. And what has your journey looked like to get to this point as a recently promoted partner at Mercury Fund?
So I actually spent over 15 years as an operator on the go-to-market side for B2B companies across early and growth stage. So I started my career, first 6 years was at the GovTech platform, PE-backed, 4 years in marketing, 2 years on the product side. Realized I have a lot of admiration for product managers, but that's like not the role that I was meant to do. So I wanted to go back to go-to-market, and I joined Atlassian in 2013 to run solutions and some enterprise marketing and launched our initial enterprise plans. I stayed with Atlassian for 7 years, which is how I got back to Austin. So that was when I was in San Francisco. And then I joined some early stage tier 1 VC-backed companies, leading marketing and growth and some inside sales functions, and had a great time working and collaborating with my board members and found them to be just great mentors. I started doing a little bit of angel investing. I think like a lot of people in like 2019, 2020, I think in pandemic era, people were like, oh, there's like this angel thing that we can do and write some checks. Then I became an LP in a few funds and got even more intrigued by venture capital, and became an advisor when I moved to Houston with Mercury Fund. Actually, when I moved to Houston, I kind of like looked around and was like, where's the startup and tech ecosystem here? I had a friend who's a VC, and she said, you've got to meet Blair Guru at Mercury Fund. This is the firm in Houston to know, and one of the firms to know in Texas. And so got to know them and started advising their companies. And then when I thought about making the transition into VC full time, they were one of the first phone calls that I made. So yep, that's how I made that transition over. And I think over the last 2 years, I'm happy to elaborate on like what that experience has been like transitioning from operator to full-time investor. But I feel like this is the right job for me.
Yeah, I would love to learn a little bit more about how the experience of evaluating a company has changed from sitting on the operator side of the table to evaluating as a VC.
Sure. Yeah. Okay. So I guess when you're interviewing and like evaluating your next career path within a company, it's all about the team. Who am I showing up to work with every day? Who am I in the trenches with every day? Is it an interesting enough problem that I want to be evangelizing and therefore trying to find like ways to optimize how we acquire customers and grow our revenue? And there's some parallels to like, is the market size big enough? Who is the founder that I'm working for? like who's backed the company often really matters, right? And I think for us on the investment side, we're looking at a lot of the same things, like who's the team, is the market size big enough, and can we get in maybe before the other people that are on the table, so that we can get them, ownership targets that we would want. So I think there's like some parallels there, but a little bit different. Like,
Yeah. You wrote a post recently about evaluating soft skills. I think within the context of early stage hiring, like advice for founders. I'm curious, as you were making this transition, you still had your operator hat on and you were evaluating the Mercury team. What was it about their obviously the track record kind of speaks for itself, but what about the like softer parts of your evaluation sort of made you feel like it was the right fit for you?
Before I knew that Mercury was the team that I wanted to join, I actually interviewed like 30 something people in venture capital. And I tried to optimize for people who had made the transition from operator to investor, and in particular from the go-to-market side. And the resounding feedback was like, hey, this is a really lonely job. Like, you're kind of a lone wolf. You're kind of a BDR. You're trying to convince people to let you give them money. It's hard because you're accustomed to being on a team and leading a team, and you have great kind of like dashboards and accountability and all these things. It's quite different on this side. I was lucky that I actually knew the Mercury Fund team pretty well. Being an advisor meant that I talked to a lot of the partners on a pretty regular basis. One in particular, Aziz Galani, he invests primarily in DevOps and security, which is the industries that, the companies that I was working for were in those industries. So we catch up every few months and get coffee. And so I felt like I had a little bit of like an insight into what it would be like to work with them. I think for me, it was like the team component was actually there, when in what I had heard from so many people was like, you're not going to get that when you go into a venture capital firm. And I really believe like we have a great team foundation at Mercury, and everyone's just a phone call away. We're very collaborative, very supportive. So
How does that team dynamic show itself in the day-to-day or week-to-week or month-to-month operating of Mercury Fund? Does it impact how you make decisions around what companies to invest in? Or just give me an idea of how the way that you operate at Mercury might be a little bit distinct from what you've seen other VCs operate.
Limited purview in terms of how other VCs actually do it, but just from like maybe interviews and then just anecdotes with other like friends in this space. So I'd say like I'm sure you've probably heard this, like Mondays are a meeting heavy and intensive day for all VCs. Like that's when we do all of our pipeline meetings. We actually do liquidity planning at Mercury. We look across the portfolio and see which of our companies are have an opportunity for an exit in 12 to 18 months, and then making sure we're supporting them through that. We have partner meeting and we have thesis meeting where we're just hitting and hammering on some of the thesis that we are looking at and are excited about, so we can go into investments with a prepared mind. And I think that's actually something one of my partners, Samantha Lewis, does a really amazing job at, is just educating the rest of the partnership team on what she's excited about and why, so that like if we get to spot those things, we can introduce them to her. But really, it helps educate us so that when she finds something, we can move quickly and with conviction. So I think like just thinking about like those Monday meetings are a really great way for us to align as a team pretty consistently. And I'd say other ways it plays out is like strategically, like how do we think about the next fund, and how do we want to allocate our dollars in terms of initial checks versus follow-ons? How do we kind of challenge ourselves on like market dynamics and changing and shifting like trends that we're seeing? So I'd say like kind of those are some high level things, and then just more tactically, like this was an adjustment for me, and this is a minor thing, but old school phone calls are like where everything lives. I was so accustomed to working in Slack day to day, right? Like at tech companies, it's like Slack is there, but like we text and we call each other like all the time. And so like that's like a small little thing, but just in terms of like, collaborative behaviors, that was not bad, but
Yeah.
different.
That would be an adjustment for sure. We spend most of our time on Slack at our CFO.
Yeah.
Does Mercury Fund sort of segment by industry at the partner level, or how do you decide who has purview over which verticals or potential investment opportunities?
Yeah, so we all have our own theses that we're excited about, or are spending time in. So Samantha Lewis is our blockchain Web3 expert. Like that is her domain, and she educates all of us on that. I spend a lot of time primarily in like kind of the developer tools, DevOps. I started looking at some infra and security. So I'd say like Aziz Galani and I spend quite a bit of time together because that's like an area where he has a lot of deep domain expertise. And then um, Keith Butler spends a lot of time on kind of the future of work, also dabbles a little bit in blockchain. Adrian Fortino spends a lot of time in like industrials and transformation of legacy industries. So we all kind of have our own zones. I'd say Blair, as the managing partner, has a deep e-commerce background. So he and I tend to look at some stuff together from like an agentic commerce lens. But Blair also kind of sits horizontally, so he can, kind of play in a lot of different areas. So yes, is the short answer. We all have our different areas that we spike in or are really excited about right now. And then it's on us to educate each other on why we're excited about the things that we're seeing.
The bit about knowledge sharing is really interesting. I think we've seen at Air CFO that one of the best use cases of AI is the more seamless kind of transmission of information around the organization. I wonder, is there anything that you have done at Mercury Fund over the last couple of years to sort of enable that knowledge to be stored and then like distributed more effectively to help you get better coverage or make sure that you are like passing those opportunities to the correct partner?
Yeah, so we've built innate in workflows that can help with everything from like deal memo creation to like refinement on like a certain like research area. We've done deep research mode and chat. I think like kind of all of the surface level things that people are using, and a little bit of training like individual agents around like how we draft, how we research, how we think. And then from like a social perspective, I'll share like content creation perspective. It's creating agents for each of us because we each have our own unique tone of voice, and we want the agent to know the things that we're the most excited about from a market standpoint. So there's a little bit of that's happening. If that's what you're asking about, is basically how are we leveraging AI to us internally? And then we evaluate, and we're always looking. Like I don't know how familiar you are with the tool called Affinity, but it's kind of like the de facto CRM for VCs, and love it or hate it. It's kind of like a Salesforce where everyone kind of loves it or hate it, but it's like the de facto, right? So I think we're always looking at like what else is out there. I would say granola, like we live in Thai bar granola notes, and then we have a shared team space so we can easily share notes with each other and kind of like hammer on things through that.
Yeah. Ethan Malik, a professor who does a lot of AI educational content, talks about the jagged frontier of AI capabilities. Have there been any examples of AI use cases that have really surprised you with their effectiveness when it comes to helping Mercury Fund operate? And then on the flip side, are there other use cases where you have been a little bit disappointed or just surprised to the downside? Like you were surprised that AI can't really crack a use case?
Yeah. I don't think I've seen anything that's really blown me away. I think that's fair to say for everyone at the firm from a VC use case, right? And I think like just venture capital PE firms in general, like our technology stack is like more limited than maybe, a Series A through Series D, and then obviously enterprise use cases. Because like I said earlier, we have phone calls, we have docs, we have a lot of things like that. And then Carta, right? Like there's the administration, the fund administration side. So I'm not talking about that side at all. I'm just talking about like the day-to-day workflow of the investment team. There aren't a lot of needs, right? Or maybe there are, but they're not as like obvious. Like we need a good CRM, we need a good doc resource, we need a good note taker. Some of these like foundational things. So I haven't seen anything that's like disrupting all of that. Maybe there's something there that like I haven't thought of that would really knock my socks off. I would say like I was experimenting for a while with AI assistants. I was really eager to find something that can manage my calendar and then like help with scheduling and inbox management. I tried a few different tools. I wasn't super impressed with any of those, but that's not VC specific, but just sharing like always looking for things that can help us. I think the use of like Manus agents and like insert whatever other tool agents are probably the most helpful.
Yeah. After this recording, I should show you some of the stuff that I've been doing in Claude Cowork recently, because that's kind of been blowing my mind.
Yeah. Oh, I'd love to see that. I mean, we use it. We do. We also use Cloud Cowork. So
Yeah. Um, but I definitely I take your point, and I agree that when it comes to the core thing that you are doing in your day-to-day as a VC, like meeting with founders, talking to founders, evaluating founders, deciding which ones to invest in, you're not going to like put a lot of weight on AI's opinion necessarily. Like, of course, it's good to give you background, but ultimately the human needs to make the call at the end of the day.
I think especially at the early stage, right, when there isn't a lot of like data or analysis for us to come through, I mean, think of like a pre-seed founder when that's when we are meeting with them, right? If we're going to do like a seed investment, or maybe we meet with them before they've even taken a pre-seed. Like there's not a lot that AI can help me with right now outside of maybe market sizing and like understanding the problem space and like what does the customer landscape look like. But the reality is like it's just the founder with a V1 of a product and a market opportunity that's likely going to change because that V1 is going to turn into a V2 and a V3, right? So I think a lot of that is really just it's human connectedness at the end of the day, and that is not replaced by all of the fancy AI tools.
Yeah, totally. Does Mercury Fund have a defined like rubric for how you evaluate founders at the early stage? Are there specific characteristics that you're sort of grading your founders across? And have you seen that shift at all? I feel like you were coming into Mercury Fund probably right around the time that ChatGPT was really getting going. Like, do you think that in the AI era, the traits that you're looking for in founders is different than it was in the late 2010s or
Yeah.
before?
Yeah, really timely question because we were discussing this yesterday in both our partner and thesis meetings, is we need to take another look at the framework or rubric that we're using for founder profiling. But the short answer is yes, we have one. And yes, it has changed. I would say like in particular, it's never been easier to create a product and thus like start a company. So the differentiators that we really look for, one of them is like subject matter expertise, expertise, because that's what they can bring to the table. Do they have a really strong network? Because distribution is key today. Because again, like anybody can build a V1 prototype, but can they actually take it to market? Do they have the network that can help them get those first, dozen to a couple hundred customers, depending on like the market size that they're going after? And then a few other, factors that we look for around like grit, ability to fundraise, storytelling, and then some other things. But yes, yeah, we are refining that. We are actively refining that right now.
Awesome. I'd love to get into how you evaluate early stage founders' capabilities on the distribution go-to-market side. But it's okay if we take a quick detour before we hop over there. Just for the audience, I think it would be really helpful to break down for a minute the various titles that you've held in your time at Mercury Fund. You started as an advisor, and then you became an operating partner, and as of recently have become a general partner. What does the role entail within each of those different titles, and how should founders think about the different seats that can be filled inside of a VC firm?
Sure. Yeah. Titles within VC are confusing and they're inconsistent across different VCs. So take that with a little bit of like a grain of salt when you are meeting with someone. I think a lot of people tend to see like, okay, there's this linear path in venture capital of like analyst, senior analyst, associate, senior associate, principal, partner. And yes, that like hierarchy can exist, and then beyond partner it's general partner, right, or managing partner. But that's on the investment team. Then there are operating partners, and if you're unfamiliar with operating partners, those are people who are like fractional within portfolio companies. And so if it's somebody with like myself, go to market expertise, they kind of pop in and out of different portfolio companies to help where they can. So I came on as an advisor when I was still working and operating full time. I guess this is 2021, 2022. I'm not quite sure what year that was. And I just had exposure to a lot of the portfolio founders and would work with them on whatever it was they needed help with, or supporting their CMOs or CROs on a variety of different topics. largely it comes down to like org design and hiring is where I like spent a lot of time. But sometimes it was on, hey, we're thinking about spinning up a product-led growth motion and self-serve motion. Can you help us workshop this idea? And like, where are the risks here? What would work? What do we need to be thinking about? What do we need to prioritize? Right. So a little bit of a range there. So I did that for a few years. And like I said, when I was thinking about coming on full time, they said, hey, like the way that, and this is probably helpful for your audience, is like VCs tend to move people into partner or like promote people around like fundraising times, right? When they're like closing. And so they said, look, like, you're not sure if this is the path you want to go down, like give us a chance to like kind of explore this with you. Let's bring you on as a venture partner and see how things go. See if you like it, right? Which was great for me because I was, at the time I was, I think 40 and I was like, holy crap, I'm about to like pivot my career into this new space. And like, what if I don't like it? So I came on as a venture partner and it was like 75% time. So I was like filling the rest of my time advising early stage companies. And I very quickly, I think within the first quarter was like, I don't know how to make this just 75% time. Like I need to go all in on this thing if I really want to learn it and understand it. And so they converted me to full time pretty shortly after. We just kept the venture partner title because it worked and I didn't really mind. And then I was recently promoted to partner. And what's different about that, I'm not quite sure yet. To be honest, like day to day feels pretty much the same. I'm still meeting, I'm still looking and sourcing for deals, meeting with founders, supporting my portfolio companies where I can, either through like board engagements or through advisory support and ad hoc questions and things like that. So
Super helpful, although also a little bit ambiguous. So I think that's maybe just a lesson for founders, is that you have to understand the person behind the title when you're trying to get in front of the right people at a VC.
Yeah, I would say like, I think it's good to know that like, the associates and the analysts are often the ones that are doing a lot of the deal sourcing, but even at the partner and GP level, like we're responsible for finding deals. Like that is our job, is to be meeting with founders all the time and understanding what people are building and where the market is heading. And so like the onus is on us just as much as it is on like any junior investor. So like kind of take those with a grain of salt. Like we should all be doing that job. But yeah, it is a little ambiguous and like fuzzy. And I think the other thing you had asked about was like on the go-to-market front. Like when I came in, I was like when I was operating, I was eager to meet more people in my role. And so I had like a decent network of people who were like running marketing or running growth at similar stage companies. But I had a VC who was really great. One of my Tomasz Tungus, like if you know Theory. So he had introduced me to other folks in his network who were at similar stages and also running marketing. And so that was incredibly valuable to me. So when I came on into Mercury Fund, I said, hey, I'd really like to form a community, bringing our go-to-market executives together. And so we've got a Slack channel, just like anything, like if you build it, they will come isn't really the way that works. You kind of have to nurture it like any community. And I run like kind of every 6 to 8 weeks, some lunch and learns. And so we're talking about various topics around like AI or how demand gen is changing and evolving. So that was one of the things that I was pretty adamant about, was like, how do we make sure that we're building a community and bringing people together so that we have knowledge transfer, shared learnings, and make each of our portfolio companies successful.
Yeah, that's really cool. I think community building is going to be one of the most sustaining sort of human-led activities as we move forward into this new world of like AI eating into more and more of kind of the knowledge work. And it's probably going to be a pretty big source of alpha for early stage startups as well. Like the founders who are able to build a community around their product will have a higher likelihood of being successful.
Yeah.
I know that you actually recently ran like a series of interviews and pulled together some content around community-led marketing. What were some of the surprising takeaways that you came across in your conversations with people who are successfully doing this today?
I think it all comes down to trust building. Like what you're trying to do is like a lot of it is like an extension of your brand, your community, right? And so it's like nobody's telling your story better than the users or the customers. And so how do you create trust within your customer and user base and get them to evangelize your products on your behalf. Also lowers your CAC, which everyone loves from a unit economics perspective. But I would say, like, I don't know if that a lot surprised me other than like the resounding feedback from every single person I talked to was inherently communities build trust. And if you build trust with your customers, obviously your retention improves, your GRR improves. Like there's just this kind of long tail positive impact. And I think a lot of like, I talked about, I said something like lowering CAC. One of the folks that I talked to, one of our founders, Colin from Collide, he built this massive community of oil and gas field hands, and they have like tens of thousands of people in this community. But he was talking about like how he was building it, and someone mentioned like it's not lowering your CAC, it's actually negative CAC. And so that really like stuck with me. So that's probably one of the more surprising like takeaways. But the other would just be like the consistent focus on the importance of trust building. And then in today's AI fueled era where all content is just AI slop, it's trust through people who have experienced your product, touched your product, used your product, and had hopefully, a positive outcome from that.
Mm-hmm. What are some of the tangible pillars of a community-led growth effort for a founder who wants that to be one of the cornerstones of their marketing function, but might not know where to start?
When I asked a lot of the community leaders, where would a founder start with this, is just start doing it. Just start building community. And that can start through in-person events. Like, can you bring a few people together that have similar interests in, maybe it's a skill set or a practice? Great if it's your product, but it's probably not your product yet because that your product is still so nascent. So start by just doing that and usually around to the practice or like the problem that you're solving in person. So start by kind of in-person events. You can start building like your own community, but often it's easiest to go tap into other communities that already exist. So take like Reddit or Quora, or like on social media, there's quite a bit of like, communities that you can attach to, get involved, get engaged, start participating, and do what you can to start some momentum that way. So tapping into existing communities and then building your own through mostly in person in the beginning.
Yeah, makes sense. What are some of the other ways that you've noticed go-to-market trending over the last couple of years? You've gotten to see for the last, sounds like almost 15 years, sort of from in the trenches, like what has been working in the go-to-market on the go-to-market front, and then you've also evaluated so many companies. How's the game on the field changed over the last in the post-ChatGPT era?
Yeah, I would say we're seeing leaner teams overall. And you asked about this or hinted at it earlier about something that I had written about optimizing for soft skills. I think we're really seeing that play through where the hard skills, I'll just unpick on performance marketing. So if you were historically like doing digital ad buying and optimizing for Google search or something like that, like those hard skills are still important, but maybe less relevant if you've got, a tool that you can use or an agent that you can use. And so it's, how do you find people who have like drive, hunger, creativity, or technologically curious, right? So I think there's a lot of like optimization, or I'm sorry, a lot of emphasis on those softer skills. I think where we are seeing harder skills play through, and this, like I mentioned earlier, I think before we started recording, like we're currently analyzing the data from the 2026 early stage go-to-market survey that we put out. We're seeing folks actually last year was one of the number one area that people were using for AI within the marketing org was around content creation and development. Well, this year, like we're still seeing a little bit of that. That's like the role that people are hiring for, because I think what people are now realizing is like you actually need somebody who can write distinctly, who has a tone that doesn't feel like it's been AI generated, who has an editorial mindset. So in some cases, we're still seeing those like harder skills play through. Lead gen, I think, this is one thing that surprised me in the data, and we're hearing this kind of anecdotally too, is the importance of events, the importance of community, the importance of just like these in-person relationships, because that really differentiates you when people are inundated with, again, AI slop, but also advertising these like really lazy AI generated outbound emails, right? Where you're like, you didn't even spell my name correctly, or like, I don't work at that company. Like, clearly there's been no human in the loop on that, right? So it's just messy.
Yeah.
So I think that's like some of the trends that we're starting to see is mostly like kind of, I think, on the marketing side. And there's still a really strong emphasis on hiring for AEs because, again, that's the human component, right? So hopefully that answers some of it. I think I answered mostly around like org design and some of the skills there, but happy to talk about anything like funnel related.
Yeah. Well, maybe drilling down into the org design question a little bit deeper, do you think that AI has changed the point in the startup journey where it makes sense for a startup to hire go-to-market? Like, I could see it maybe potentially working in either direction. Either it pushes out the need to hire and go-to-market, or maybe it actually makes it more important at the early stages. What have you seen working?
Yeah, we had a founder who said, "Hey, I'm actually not going to hire anyone from marketing. I'm going to do it all myself because I'm just going to manage all of the agents." And I was like, "Okay, like call me in 6 months. I'd love to hear how that goes. Like, I don't doubt that you could do that, but like, is that the highest and best use of your time?" And to like respectfully, like, you don't have a marketing background or like a go-to-market background. And then within like a quarter, he was like, "Okay, like, kind of need someone to come in and like build our strategy and then maybe manage these agents." And I'm like, "Great!" Like, I was hopeful that you would still like come to this decision, but also like if you didn't, I would love to learn how you do it, right? I'd say we have one of our portfolio companies, Bose, has an incredibly lean marketing team. I think there's like 1.5 full-time and they manage all of that through agents. And so that's like how this is playing out kind of in real time of like leveraging and augmenting kind of the agent side. So I might have lost some of your question there, but
No, yeah, it's AI can be such a multiplier, but if you're multiplying by zero, like you're still not really going to get results. So I think you need
yeah.
some level of expertise somewhere in the organization, at least as a filter or a judge of like whether something that's being produced by the AI is of high quality.
Right,
Um,
right.
we had a founder on a sales call a couple weeks ago say that they were going to do all of their accounting using OpenClaw, and I was just kind of same thing that you said, like, all right, we'll talk to you in a quarter or so. Let us know how that goes.
Yeah.
If that works, then that could be a problem for your CFO. But not I'm not too worried about that working.
Yeah. Yeah.
Yeah, the human expertise and judgment, and people love talking about taste these days, but like I think that is like a very necessary skill in any function at an
Yeah.
early stage.
Yeah. I mean, like you hear about like, are we going to have the solopreneur who like grows to $1 billion valuation? Yeah, probably. And that person probably has done all of the go to market on their own if they are so like the solo founder play. Probably, I think those are like maybe fewer and far between, but I think we'll start to see like very lean teams, and maybe you have like maybe generalized like roles and titles where this person owns go to market, which is broadly encompassing everything from acquisition, conversion, retention, expansion, and comms. And maybe that person does a lot of different things where they used to be more specialized, in a traditional SaaS business.
Tell me a little bit about the themes and the thesis that you're developing in your own investing career, and what are some areas that you think the broader market is still sort of waking up to that you're really excited about?
So two main things. One is agentic commerce, so the future of buying behaviors. I spent a lot of time in my career optimizing for user and customer journeys, and B2B purchasing often follows consumer behavior. So that's a space that I spent a lot of time thinking about. So everything from trust, verification, payments, which will probably be a blockchain, will probably be a very important part of that story, to search and discovery. And I can talk a little bit about some of the investments that we've made recently there. One in particular is a company called Nectar Social, which is the agentic operating system for social media. And their, search now happens, and search and then sometimes all the way through purchase happens in a single social experience, whether that's like through an influencer, right? Like, how do brands stand out and differentiate themselves? Especially when it comes to like how search has changed. We don't just go to Google and look for something. We don't just have an ad on a TV screen, right? Like things, the behaviors are changing. And so oftentimes you're like kind of doom scrolling and sure you get surfaced ads, but then you get surfaced an influencer who like is wearing a bag or something, whatever, and then you find the bag and you research it a little bit, and then you click to purchase either there, or you're searching on ChatGPT. We did an investment in a company called BrandRank, and that is their entire play, is optimization of LLMs and visibility of LLMs on LLMs for consumer brands. And then the other space that I spent quite a bit of time thinking about, and maybe have been a little bit like more gun shy around, is like developer tooling and empowerment, because obviously developer tooling has changed quite a bit. We have like all of these incredible tools that have come out, like think like cursors and Claude Code and Copilot, right? And so they keep releasing and launching new features and functionality faster. So what was maybe a company is now like a feature. And I think one of the ones that I would highlight is around like the database and infrastructure layer. So Supabase is like the de facto Postgres database as a service for anybody who's an AI native company. And we have several of our portfolio companies that are using Supabase. So a company based here in Austin called Dreambase is the insights and analytics layer on top of Supabase, and they'll expand into other Postgres databases. But they're starting with Supabase because they have 7 million developers. They recently announced that, I think, like a week or so ago. I mean, there's a massive market opportunity just within, that ecosystem. And so those are a couple of like the ways in which like my thesis plays out. So happy to elaborate on any of that.
Yeah. How do you think that the look and feel of a developer tool is going to change in the coming years, based on the fact that developer tools are no longer exclusively the domain of actual developers? Like I use Supabase for about a half dozen projects, both for Air CFO and for little passion projects that I'm working on the side. And I've used Dreambase as well, and it's a really great experience, in part because of some of the AI native like functionality and the onboarding assistant and all of that kind of thing. But yeah, I'm curious to hear what you think about where the developer tools space is heading compared to what it looked like when it was much more kind of narrowly defined as like tools that software engineers would use.
Yeah. Like the I don't know if you remember that like DevOps infinity loop. Did you ever see that? Okay, there was like this image of a kind of like infinity loop, and there were different parts of like the DevOps workflow, and then there were like tools on that. I'm like have this seared into my brain because I worked on our DevOps narrative at Atlassian and like took that to market for enterprise, and the proliferation of tools across that landscape, right? And so that's what I'm thinking of when you're talking about it. I think dev tools, because like what is an engineer, what is a developer, is like changing. I would imagine that there's more of like a consumer element to like the design, the look and feel. Like it needs to be more intuitive. Obviously, prompt engineering is a big part of it. So there's an education, like, are you prompting correctly? Do you understand like how to connect to database? Like, what is a database? Why does it matter? Like, how do you select the right database? And then how do you get insights and intelligence from it, right? Which is where Dreambase comes into, and it's awesome to hear that you're using it and finding it valuable. So like my take is like I think things will get just more naturally more intuitive and focused on probably more of like a consumer lens to them. On the flip side, and that's like the kind of like the application layer. Like I think on the infrastructure layer, like kind of flip side, like those tools will continue to be like optimized for like back-end and like the highly technical engineer persona.
Yeah. It's funny that there's kind of both things happening at once. I think the DevOps stack is becoming much more like prosumer friendly or like vibe coding friendly, but then also CLI tools are coming back into vogue at the same time.
Yes.
So I guess we're just kind of in like a figuring it out phase, and no one's entirely sure like where it's going to settle at the end of the day.
Right. For what it's worth, like one area that I was digging into and met with a few companies that are building in this space is around like context engineering. So when you're vibe coding and you're kind of like a solo eng, and you're just like prompting and you're asking it to like help you create the code to build like whatever it is, like make this button blue or something, right? You miss intent, right? And so that's like one of the pieces I think that will maybe get folded into existing tools? Like, will Cursor go down into that space? Maybe. I think they've hinted at that. Or will these companies that are building these like context engineering like get consumed by them? Maybe. But like that's the part that like I wouldn't think about, right? As like a vibe coder. Like I don't like think about like the historical context of the reason why I prompted it to make the button blue.
Yeah.
But if I'm on a team, even if it's a smaller, leaner team, like that context really does matter. Not just for like pull requests and reviews, but like the future state of the code.
Yeah, absolutely. We're in the process of making the transition from our engineering team consisting of myself and our CTO to actually bringing on a product manager and some additional engineers. And we're trying to wrap our arms around that because it is going to introduce just a lot of like these context gaps that I think are potentially going to really hamper like the performance of the AI coding like platforms that we're using. So that's a really big problem to be solved for sure. Are there any second, third order effects of what you're seeing in either agentic commerce or DevOps infra that you think are going to become much bigger deals kind of 1 to 2 years down the line that you're just now starting to see kind of peek over the horizon?
On the agentic commerce side, I would say like agent identity. I don't think we've quite figured that piece out yet, right? Like we're still figuring out like human identity, right? Like in verification there, two-factor authentication and like the plethora of like solutions around that. So how do we think about the agents verifying the human behind the agent's decision, right? So I think there's going to be quite a bit around that as like a second order effect. Fraud is like an extension of that. So fraud prevention, and making sure that like the agents we've had bots acting on behalf of companies and people for years and years and years. More often than not, we thought they were nefarious, but now they like may not be. And so like, how do we make sure that we provision them appropriately and we give them the permissions to act on our behalf in the right ways? These again comes back, from a payments perspective, comes back to like the blockchain piece that I mentioned. If like you can set smart contracts, so you can tell it like how much to spend and on what things, and it can just do, the agent can just do that on your behalf. So I think there's like some second order effects, around identity, permissioning, and payments.
Yeah.
That I don't think we've quite solved yet.
Totally. I find it really funny that the cybersecurity stocks have been hammered so hard over the last couple of months, because when I look at what's happening, it just looks to me like the surface area for cyber risk is just like increasing by an order of magnitude. So like these cybersecurity companies are only going to become more important. And there's all of these new like dimensions of cyber that were never even a consideration before, that are going to become like critical in order for agentic commerce to really be unlocked. So
yeah, I agree.
Love to end with a couple of questions around like advice for founders and that sort of thing. What's a piece of advice that you hear tossed around for early stage founders that you think is outdated or just altogether unproductive for a founder, that maybe they should reevaluate or just take with a grain of salt?
Maybe this is a spicy answer, but do you need to fundraise? Right? Like, I think people always tell you when you start a business, like you need capital and you need it yesterday. And so therefore talk to every VC that you know. I think a lot of founders don't understand what the VC and founder relationship looks like for the long term, right? Like this is a marriage that you're entering into. You've got people around your cap table who really care about, the success of your business. They're literally invested in the success of you and your business. And depending on the ownership that they take, like you're going to probably hear from them a lot more, and they're going to be very opinionated. And so I'm not saying don't take capital, but just know what you're entering into. And so then that comes to, something we were chatting about a little bit earlier, which is like the titles. I wouldn't care about the title of the person in the firm, but I'd care about what they invest in, what their background is, and how they're going to help you build your company, right? Like what skill sets can they kind of augment for you? Can they be a force multiplier to you? Do they have this incredible network of, potential customers and prospects for you? Like, what value add does that partner provide, regardless of what their title is? What is their value add to you? So, I don't know. That was a great question. I'm probably going to be thinking about this on my drive back to Houston. What advice are people giving that has changed?
I mean, you might not need to take venture capital as a very spicy answer coming from a venture capitalist.
A
So
lot of money it had right now, but I think it's super important.
yeah,
You know what you're getting into.
I think it's true. I think a lot of startup founders become entrepreneurs because they want to be their own boss. But when you're taking venture capital, like you then have a boss. And so that is not a decision to be taken lightly for sure. How do you think that this ongoing trend with barriers being lowered for starting businesses and one person companies being able to get off the ground and build a product, like how does that impact the asset class of venture capital or like the startup journey, which has traditionally been kind of this like stair step approach where you raise your pre-seed and then 12 to 18 months later you raise a seed and then 18 months after that you raise a series A. Like it feels like things are shifting pretty quickly on that front. I'd be curious to hear how you are all thinking about it at Mercury Fund.
Yeah, I think AI native companies who have hit product market fit are scaling faster than anything we've ever experienced, even faster than, SaaS era companies, of course, SaaS era companies, but any like transformational kind of shift in technology, whether that was like from cloud or from SaaS. I don't think anybody's kind of seen these growth rates. So with that comes like subsequent funding rounds faster than we've seen or experienced. And then, in my mind, some of these funding rounds are they're so big that I wonder if the founder understands the implications of that, right? Because these valuations are things that they have to grow into, and then maybe limiting in terms of exit potential, right? I think that's just like from our perspective, like we very rarely invest. I don't know that we have in just a single entrepreneur founder who hasn't had some kind of a semblance of a team around them. But of course, we've like known the founder when it was them and an idea, and we're really eager to back them as soon as they kind of get off the ground. But we don't go that early, right? As a firm, we're usually in like the seed, and so there's like some semblance of a team and some initial signs of traction and leading indicators of like longer term success. So I think like that's how I would respond to that is like the funding rounds are what they are for just because like we haven't seen this play out. So we'll see where it goes.
Yeah. Yeah. Some of the companies that we come across at Air CFO are putting some of the stuff that we saw in 2022 to shame in terms of like the amount of capital that they're raising with basically nothing except for a team that spun out of OpenAI or something along those lines.
I was trying to avoid that analogy of like, are we seeing the 2021-22 playbook like all over again, right? But like, we might be, right? But maybe more, it may be a more extreme version of that. And yes, like people's profiles are commanding very high initial checks and initial valuations, and we'll see how that plays out.
Yes, indeed. Are there any little bits of advice or resources that you would recommend to especially a first-time founder as they are getting ready to set out on their own fundraise journey?
Do your research, get to know the firms. I think there's a lot of people who are, who would love to have a tier one backed VC on their cap table, and I understand why. It's very compelling. It can help with talent recruiting in the future, and then potentially follow on funding in future rounds. But I would say get to know the partners and understand like what your what that marriage, like I said earlier, looks like, right? This is not meant to be just a Mercury pitch, but I'll just share like the way that I sort of position myself against maybe some of those tier ones is you get me as your partner, right? And here's my background, and here are the things that I can deeply help you with. And I'm available to dive in as much as you want me to dive in. And as much as you're like, hey, back off, like I will back off. But I help with anything from org design to hiring to running workshops around like customer journey mapping. And we talked about a product-led growth self-serve journey earlier, right? So it's just kind of a variety of ways in which the partner can be very supportive to you. So I would say just do your research on the firm, the partner, and what value add they're really going to provide.
Yeah, I like that. I think founders oftentimes start at the firm level, and it would be interesting to run a search that just sort of like hid the names of the firm that is on the LinkedIn profile and just looked at the individual partners, because that's really what you're getting at the end of the day. Obviously, different VCs have different infrastructures in place, but your experience with a VC is mostly going to be determined by your relationship with the partner who comes onto your cap table and sits on your board.
100%. Yeah. And you get exposure to the rest of the firm. So there's value in that, right? And a lot of firms will have like in-house talent recruiting or operating partners and, other like advantages that, every firm is a little bit different. So I would say like start with the partner and then understand the firm. But I'm sure a ton of people will tell you that you should start at the firm because the brand and the logo matters.
Yeah.
So it's not to discredit that. Like there's weight and credibility behind that. And those brands have the brands that they have for a reason. So I don't want to discredit that. But I also think it's important that you know who is the partner who is joining your cap table and then potentially even joining your board.
Yeah. No, I think that's really great advice. And a nice place to wrap up. So, Aileen, thank you so much for taking the time to chat with me. It's been really great getting to know you, and I'm excited to follow along with the Mercury Fund journey.
Awesome. Thanks for having me, Alex.
Thank you.